if you are importing any machinery from USA, what you are supposed to do? You are supposed to pay them in US dollars, not in Indian rupees. We are supposed to compute the basic custom duty based on the assessable value. So if any expenditure incurred after importing the machinery to the port, then that expenditure should not be considered. You will compute IGST on assessable value plus basic custom duty plus social welfare surcharge into rate. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram, First Grade College, the Temple of Excellence, MYSURU. Dear students, welcome to this new session on unit number 6, that is Customs Act 1962, which is therefore 6th Sem BCom students who are studying under University of Mysuru. Yes, dear students, in the previous session we discussed about what is customs duty and what is specific duty and ad valorem duty, and what are all the reasons for prohibition of importation and exportation. So in this session we will be knowing about the format for computation of assessable value and customs duty payable, and also we will be solving few problems based on computation of assessable value. So moving on to the today's topic. So format for computation of assessable value. Yes, if you know the format, if you are pakka with the format, so easily you can solve the problem and you can score 15 marks in your exam. So you will be asking question from customs duty for 15 marks and also for 5 marks. Sometimes you will be asking the question for 10 marks also. So totally you will be getting the questions for 30 marks from this particular unit with respect to practical, that is solving the problems. And with respect to theory, you will be asking 10 marks one compulsory question, that is reasons for prohibition of customs duty or types of customs duty. So if you concentrate on this particular unit, compulsorily you will get the questions for minimum of 40 marks in your main exam. So 15 marks one question, 10 marks one question, 5 marks one question, and 10 marks one theory question. So overall you will be getting the questions for 40 marks only from this unit, that is unit number 6, Customs Act 1962. So moving on to know the format for computation of assessable value. So in this particular problem, we are supposed to solve the problem based on two formats. One is computation of assessable value, another format is computation of customs duty payable. So if you look into the computation of assessable value, we are supposed to make three columns: particulars, amount, amount. So we are supposed to make three columns: particulars, foreign currency and Indian currency. Particulars, foreign currency and Indian currency. Because while you are importing the product, you will be paying them in their currency. Okay, you will be paying them in their currency. For example, if you are importing any machinery from USA, what you are supposed to do? You are supposed to pay them in US dollars, not in Indian rupees, right? So whatever the amount you are paying in dollars, that is called foreign currency. And if you convert that dollar into Indian rupees, whatever the value you will get, that value is called Indian currency. So the first thing we are supposed to consider is cost of the goods. Yes, first thing you are supposed to consider the cost of the goods. So cost of the goods, you will be giving you the foreign currency value and you will be converting it into the Indian currency. Next, for cost of goods, you are supposed to add packing charges. If packing charges is given in the problem, add packing charges to the cost of goods. And also, you are supposed to add commission paid to broker. Yes, if the commission is paid to the broker, then we are supposed to add that commission along with the packing charges. Next, design and development charges. Yes, if you are paying any design and development charges for importing products, then you are supposed to add that value also. Next, also you are supposed to add technical fees. If you are paying any technical fees, then you are supposed to add that also. Next, material supplied by the importer. Yes, if any material is supplied by the importer, then that is also supposed to be added to the cost of goods. Next, you are supposed to total all these additional expenses which are incurred with respect to the cost of goods. So after adding this, you will get some total. Okay, you're supposed to add that to the cost of goods. After adding that, you'll get some total. Okay, this total is called FOB value. FOB value. So cost of goods, for cost of goods you will be adding packing charges, commission paid to the broker, design and development charges, technical fees, material supplied by the importer. If you add this all expenditures, if it is given in the problem, okay, it is not mandatory. Sometimes packing charges will not be given in the problem. If it is given, we will be considering those expenditures. If it is not given, not to worry. Okay. So if you add and if you total it, you will get some total. This total is called what? FOB value. For FOB value, we are supposed to add two items. We are supposed to add two items. Which are those? The first one is transportation charges. Yes, we are supposed to add transportation charges. If the transportation charges is not given in the problem, okay, must and should we are supposed to add it. See, these expenditures, if it is not given, need not to worry about it, and it is not compulsory to add these expenditures. But it is compulsory to add transportation charges as well as insurance value. In case if the transportation charges is not given in the problem, what we are supposed to do? We are supposed to take 20% of FOB value as transportation charges. So what we are supposed to do? We are supposed to do 20% of FOB value as transportation charges. Next, insurance value. Yes, if insurance value is given, then take the given value. If the insurance value is given, take the given value. If it is not given, then you are supposed to take 1.125% of FOB value as insurance value. Transportation charges is given, you are going to take the given value. If it is not given, 20% of FOB value. Next, insurance value. Insurance value is given, you will be taking the given value. If it is not given, 1.125%. 1.125% of FOB value will be considered as the insurance value. So next, you are supposed to add these two items, that is transportation charges and insurance value with FOB value. So if you add, then you will get some total. So that total is called what? Assessable value. Yes, that total is called what? Assessable value. So this is how we are supposed to compute the assessable value. So moving on to know the format for computation of assessable. So next, moving on to know the computation of customs duty payable, we are supposed to make two columns, that is particulars, amount. So here basic customs duty. Yes, basic customs duty is also called BCD, basic custom duty. Next, how we are supposed to compute the basic custom duty? We are supposed to compute the basic custom duty based on the assessable value. See, whatever the value you will get here, the assessable value, this value into rate of tax, whether it is 10%, 20%, 30% prescribed by the customs authority. So assessable value into rate, you will get the basic custom duty value. Next, social and welfare surcharge. Yes, you are supposed to consider social and welfare surcharge. So how you will compute it? You will compute it based on the basic custom duty into rate. So you will get the value of social welfare surcharge. Next, moving further, IGST. So how you will compute IGST? You will compute IGST on assessable value plus basic custom duty plus social welfare surcharge into rate. So you will add all the three items, that is assessable value, basic custom duty, social welfare surcharge into the rate of tax. Next, compensation cess. So how you will compute compensation cess? Based on the assessable value, basic custom duty, social welfare surcharge into rate. Next, anti-dumping duty. So how you will compute anti-dumping duty? Assessable value, basic custom duty and social welfare surcharge into rate. So this is how we are supposed to compute the custom duty payable with respect to different types of taxes, that is basic customs duty, social welfare surcharge, IGST, compensation cess, anti-dumping duty. So if you total all the taxes, whatever the total you will get, this total is called what? Customs duty payable. The total is called customs duty payable. So this is how we are supposed to compute the customs duty payable, and this is the format to compute the duty payable. So moving on to the first problem. From the following information, compute assessable value. Yes, from the following information, compute assessable value. Cost of the machine $20,000, packing charges $1,000, technical fees $1,500, material supplied by the importer 1,20,000. 1,20,000. It is in rupees, not in dollars. Next, transportation charges $2,100. Exchange rate rupees 70 per dollar. Yes, because we are purchasing it from other country and we are supposed to pay them in their own currency. So their currency values 70 rupees per dollar. Yes, we are supposed to pay 70 rupees to pay them in their currency, that is in dollar. So moving on, computation of assessable value. So $1 is equals how much? 70 rupees. So for $1, how much we are paying? 70 rupees. So particulars, foreign currency, Indian currency. So cost of machine. So what is the cost of machine given in the problem? It is $20,000. So $20,000 cost of machine, $20,000 into 70 per dollar, into 70 per dollar. So for foreign currency we are taking $20,000. So into 70 per dollar, how much you will get in Indian rupees? You will get 14 lakhs. How much you will get? You will get 14 lakhs. Okay, got it? So for that, for cost of machine, now add packing charges is given. So what is the cost of packing charge? $1,000. So if you want to convert it into Indian currency, 1,000 into 70 per dollar, how much you will get? You will get 70,000. How much you will get? You will get 70,000. Next, technical fees is given in the problem. So what is the value of technical fees? $1,500. So $1,500 into 70, you will get Indian currency value, that is 1,05,000. Next, material supplied by importer. Material supplied by importer, it is given in Indian currency only. So directly we are taking it in Indian currency, 1,20,000. Next, no other expenditure is given. So add these three items, that is packing charges and technical fees and material supplied by the importer, with 14 lakhs of cost of goods, you will get 16,95,000. So what is this 16,95,000 is called? It is called FOB value. 16,95,000 is called FOB value. Add, next, add transportation charges. Add transportation charges. So first we have to look into that. It is given in the problem or not? Yes, it is given. It is given in the problem. So $2,100. If it is not given in the problem, then we would have considered 20% of FOB value as transportation charges. But it is given in the problem, that is $2,100 into 70 rupees. How much you will get? You will get 1,47,000 rupees in Indian currency. Next, add insurance value. Add insurance value. So first we have to look into that, whether it is given in the problem or not. It is not given in the problem. Insurance value is not given in the problem. So what we are supposed to do? We are supposed to consider 1.125% of FOB value as insurance value. So what is the FOB value we have? 16,95,000. We have 16,95,000. So 16,95,000 into 1.125%. How much you will get? The insurance value? You will get 19,068 rupees. 19,068 rupees will be the insurance value. So add this 1,47,000 and 1968 with 16,95,000, you will get 18,61,068 rupees. That value is called assessable value. I hope all of you understood how to compute the assessable value. So first, cost of the machine. Next, add additional expenditures except transportation and insurance. We will be adding it later on. So after adding that, you will get some total. Total is called FOB value. Then add transportation charges and insurance charges. Total the value. Whatever the total you will get, that total is called what? Assessable value. So moving on to the next problem, problem number 2. From the following information, compute accessible value. Cost of the machine $45,000. Design and development charges $2,000. Packing charges $1,500. Technical charges $1,000. Transportation cost from port to factory. Yes. In case if the transportation charge from port to factory is given in the problem, we are not supposed to consider it. We are not supposed to consider it because we will be considering the expenditures which are incurred up to the port. We will be considering the expenditures which are incurred up to the port. So if you are importing the product, then what and all expenditures incurred only up to the port area, only that much of expenditure should be added, not other expenditures which are incurred from port to transporting it to your factory. So transportation cost from port to factory not considerable. Next, insurance charges from port to factory, yes, not considerable. And exchange rate is 74 rupees. So moving on to solve the problem, computation of accessible value, $1 equals 74 rupees. So particulars, foreign currency, Indian currency. Cost of machine, what is the cost of machine? $45,000 into 74, you will get Indian currency. How much? 33,30,000. Add packing charges, that is $1,500 into 74. How much you will get? You will get 1,11,000. Next, technical fees. So 1000 into 74. You will get 74,000 in Indian rupees. Next, design and development charges. 2000 into 74. How much you will get? 1,48,000. So total the value you will get 36,63,000. It is called FOB value. So for FOB value, add transportation. Yes, transportation cost is given, but that cost is not supposed to be considered because it is incurred after importing the machinery to the port. After importing the machinery to the port. So if any expenditure incurred after importing the machinery to the port, then that expenditure should not be considered. So this value we are not considering it. So what we are supposed to do now? Transportation charges, we are supposed to take 20% of FOB value. So what is the FOB value we got? We got 36,63,000. So we are supposed to take 36,63,000 into 20%. You will get 7,32,600. How much you will get? 7,32,600. Next, insurance value. Insurance value is given in the problem. Insurance value is given in the problem, but we are not supposed to consider this because it is incurred from port to factory. So now what we are supposed to do? We are supposed to calculate 1.125% on FOB value. That is 36,63,000 into 1.125%. You will get 41,209. So total these two values with FOB value, you will get 44,36,809. That value is called what? That value is called accessible value. It is called accessible value. Next, moving further to the next problem. From the following information, compute accessible value. Compute accessible value. So cost of machine 30,000 pounds. Packing charges 1,500 pounds. Commission paid 1,200 pounds. Technical fees 1,000 pounds. Freight charges from port to factory, we are not supposed to consider this because it is incurred from port to factory. Next, insurance 800 pounds. Exchange rate notified by the board 100 rupees per pound and exchange rate notified by the RBI 105 rupees per pound. So always we are supposed to consider the exchange rate notified by the board, not by any other authority, whether it's by RBI or by SEBI. No, we are supposed to consider the exchange rate notified by the board. So now we are considering 100 rupees per pound, not 105 rupees. So moving to the problem, computation of accessible value, 1 pound equals 100 rupees. 1 pound equals 100 rupees. Particulars, foreign currency, Indian currency. The first point, We are supposed to take cost of the machine. First point, cost of the machine. Cost of the machine 30,000 pounds into 100 rupees per pound. How much you will get? You will get 30 lakhs in Indian rupees. How much you will get? 30 lakhs in Indian rupees. Next, add packing charges. Add packing charges 1500 pounds into 100 rupees. You will get 1,50,000. Next point, technical fees. 1000 pounds into 100 rupees. You will get 1 lakh. Next, commission. 1200 pounds into 100 rupees. How much you will get? 1,20,000. Next, only that much with respect to that. So total these three values with this cost of machine, you will get 33,70,000. So this 33,70,000 is called what? FOB value. Next, for that, add transportation charges. Add transportation charges. So transportation charges is given in the problem, that is freight, but we are not considering it. So now we are supposed to take 20% of FOB value. So what is the FOB value? 33,70,000 into 20%, you will get 6,74,000. You will get 6,74,000. That value is called transportation charges. And insurance value. Yes, insurance value is given 800 pounds into 100. You will get 80,000. 800 pounds into 100. You will get 80,000. So add these two items. You will get 41,24,000. How much you will get? You will get 41,24,000. That value is called assessable value. What is that value is called? Assessable value. So this is how we are supposed to compute the assessable value by using all the inputs. That is all kind of adjustments. So that's it with the today's class. We will solve few more problems in the upcoming classes. Until then, thank you all.